You're tuned into the closing trades right here on Nifty now. I'm Shrishti Sharma, and with me is Mansi Dave. And Mansi, the decision is through. We were waiting by to listen from the GST rate rationalization meeting. And yes, of course, they also agreed to scrapping the two different tax slabs, and feels like the markets are also cheering the fact.
Absolutely, it's all positive, and the start of the week, even during the weekend, we had all of these positive cheers coming in, and now it is playing around. And right now, if you see, after the news which came in on the 15th of August, and where Prime Minister Narendra Modi gave the GST rate rationalization strategy for the first time, we have got the final touch to it, where the group of ministers have accepted the centre's proposal. So that's another positive. And if you see, the markets are also cheering the same since the start of the week. It being a weekly expiry session, though we see good sentiments on the market, 25,100 and above on Nifty. Bank Nifty was not performing in the trade yesterday, but today we see some good signs over there as well, where banks and financials are showing good signs. You see the PSU bank as well as the private bank space, and the smaller banking spaces are also showing good opportunities at present. Talking about the broader markets are constantly trying to outperform the benchmarks, and as you see, we'll see stock specific as well as sector specific approaches on the mid cap front right now, and the gains on the small cap have frizzled down, and mid cap right now on a negative note, around 74 odd points down. But the larger contributors which are contributing to the market and showing signs of positivity in this sentiment where the markets are good enough, it's ICICI Bank, Reliance, L&T, HDFC and Cipla. So clearly we have the banks and financials, big boy Reliance, HDFC Bank and Cipla. Pharma, we did see it taking a breather in the last trading session. Now it's a comeback for the pharma space as well. HUL, Bajaj Auto, NTPC, M&M and Power Grid are a few stocks which are the laggards for the day. And Shrishti, if you see the sector-specific approaches, barring the auto, energy and some sort of mid-select players, and of course FMCG has taken a backseat, but otherwise we have good enough for positivity in the pharma, real estate, IT, pharma topping the charts.
Well, indeed, that's a bit of a rebound, Mansi, that we are getting to see. Yes, of course, that overhang with respect to tariff does remain. But yes, like you were mentioning, that since the start of this weekend, it's the news-heavy week, and add to that is the bottom of your screen, wherein the online gaming bill has been passed in Rajya Sabha. Do remember that just yesterday we had seen the bill passing by in Lok Sabha, and today is the second house that has passed the bill, and that is indeed in focus right now. The implementation will be through, but we have been flagging of Nazara Technologies on the back of that. Just yesterday, the stock was down over 10%. Today as well, the stock actually ended the day in the red, but along with that, there has been a bit of a recovery from the day's lowest point. The reason being that the company has finally said that they may write off most of their investments in Pokerbazi, where Nazara Tech used to have more than 40% stake. Just yesterday, we also had the management, and we were just questioning him about whether or not is that a possibility. He was of the view that it will be decision in making, and yes, the company has decided to write off that investment of over 800 crores that the company has made. The investors for now are finding some bit of a relief on back of that. But yes, the stock is indeed volatile as we speak right now. But back to the markets, and especially on the benchmark indices, they are showing resilience. But what your strategy be like? Let's try to understand, and let me welcome Sunny Agrawal, Head of Research, Fundamental Desk at SBI Cap Securities, joining us. Hi Sunny, good to be speaking with you. And firstly, a lot of excitement in the markets, the major factor being the GST, and today the decision is through. What's your sense that how much of a more headroom is left for the markets, and how happy can they be going ahead?
Yeah, good afternoon, everyone. I think, yes, definitely. I think PM's speech on Independence Day on rationalization of GST has definitely tilted the scale of market towards the consumption pack. In case, as we were hearing today also, that most of that committee has accepted the proposal to move from 4 slab to 2 slab GST structure, and it looks like the entire rationalized GST structure will be implemented in the month of September. I think again it augurs well for, as it's widely been discussed, predominantly for a consumption basket, whether it is auto, especially on smaller cars, or for an entry-level bike, or for that matter, entire consumption basket. Cement to some extent can benefit because of the rationalization and GST. and obviously the benefit will flow through the end user, like end user segment like real estate, or for that matter infrastructure sector. So I think yes, I think it's the cut, the rationalization in GST will definitely give a boost to the consumption, and it augurs well for this entire consumption related basket and stock. And indirect beneficiary can be a new age businesses, whether it is food delivery companies like Eternal, or for that matter Swiggy, or for that matter a brand owner like Honasa Consumer, or for that matter a reduction in GST can lead to a increase in volume for a company like PB Fintech. So I think entire consumption as a sector or space is looking well, and we feel that the sector rotation is something which is in play. So maybe for a time being, the money will move out of an capex driven stories through, and will enter into a consumption driven pack, which is kind of underwhelmed since last 1.5 to 2 years.
Was already set for a festive boost, and then came the rate rationalization news, which further gave positivity to the entire sector. But we are slipping into a short break on that note. While we come back, we'll be joined by the management of Blue Star, Mr. B. Thiagarajan. Welcome back. You're still watching Closing Trades, and GST rate rationalization, and now the absolute reason coming in, an absolute announcement coming in from the government. We see all the consumption related baskets cheering, and so are the white goods segments as well, the electronic manufacturers in particular. And on the same, let's go across to the management of Blue Star, Mr. B. Thiagarajan, MD, joining with us, and let's try and understand how is this step going to impact their business on the whole. Mr. Thiagarajan, thank you so much for giving your time to ET Now. Good afternoon. Nice talking to you. My first question, with the news of GST cuts and the rate rationalization which has come in, of course, it is in the positive sentiment for the consumer. But what are your plans, and how are you preparing to capture the demand? Because I'm sure with the cuts, we'll see a lot of demand, and also not to forget the festival season, which we'll see now.
Good afternoon. It's a pleasure interacting with you. Thank you for having me. It is indeed an important and welcome announcement. The entire benefit will be passed on to the consumer, unlike other changes that take place. In this particular case, this is the last item in the invoice. So when we bill the dealers, or the dealers bill the consumers, it is going to be at a lower rate, and therefore the consumer will get the entire benefit. It was a year in which the summer season was impacted. Therefore, there is inventory in the system, and we have been hoping that the festival season will spur the demand, and it is going to happen. And I'm very glad this has been done at record time. And I think a few more formalities are left. And in the final form, I suppose it is going to be 18% for air conditioning and air conditioning systems. There are quite a few commercial air conditioning products are also taxed at 28%. That also should come down. On the whole, we welcome this. The entire industry should welcome that. Now, the implementation speed is very important, because till such time it is becoming effective, people will postpone the purchase. So you can imagine, no one will be buying from now on till the date the announcement comes, final announcement comes. So I request the government to expedite the process, and they are moving at great speed. I'm sure it is going to happen very fast.
Mr. Thiagarajan, all this is happening at a very fast track pace. But Mr. Thiagarajan, 28% was you were already charged, but now it's expected to be 18% is what you're flagging off. But amidst this period, what sort of a demand sentiment you are finding on ground? Because what we are getting to understand is that the people are now really postponing their purchases in order to get benefit of a lower GST rate. And along with that, the companies are also offering very heavy discounts right now.
It is partially true in the sense that you can imagine the summer season was bad. We all planned for 25% growth in Q1, which did not take place, and therefore everyone is interested in reducing their inventory and improving their revenue. So the price levels are at its best already in the marketplace. Now, if you indeed people will postpone, I don't expect them to leave out the benefit of GST reduction. It is substantial. So therefore, they will pass, wait for the effective date and start buying. It is fine. It was August 15th is the first indication, and today group of ministers approve, and I suppose rest of the formalities will be completed. So in August, rest of the period, if sale is not taking place, it is perfectly fine. We should wait for the final announcement.
That's right, Mr. Tyagarajan, urge you to be with us because we and also our viewers want to listen a bit more from you. But we'll take another piece of information and let's go across and listen in what Rishabh Jain, Bekaji Foods International had to say on the big GST rejig on which will benefit the consumers. Let's listen that once.
All gains and all will go into 5%. That's what we think as an industry player. And it will be great for all. We see good rate of volume going up in this category. And simplification of this will also be put up a lot of good money in the hand of all rural because we will pass on the prices. All the industry player will reduce their MRP, good for the industry and good for Indian consumers. So good for the industry, I think.
Okay, so that was Bekaji management talking on the demand and the implication of the current GST rate rationalization. How is it going to impact their business? But coming back to you, Mr. Tyagarajan, I did hear you when you say that the benefits will be passed on to the consumer, but at the cost of repeating myself once again, will you pass on the full benefits to the consumer or retain some to improve your margins? And also the rising competition is another barrier which you see at present. How are you facing that and how are you beating the competition at present?
We will pass on the full benefit. This is a benefit which the consumers are entitled to, and I have to improve the profits through certain other measures. Most importantly, there is adequate manufacturing capacity in the country. The competition is high, and therefore we should go ahead and pass on the entire benefit to the consumers.
With this, we let you go on that, sir. Thank you so much for taking the time out and speaking with us this afternoon.
Thank you.
But with this, viewers, once again, time now to slip into a very short break. Don't go anywhere. Lots more lined up on the other side of the break. Stay tuned. Welcome back to Closing Trades right here on Nifty now. As of now, the Nifty 50 is holding steady with almost 50 points of gain right now, but well above that 25,100 mark for itself, while Nifty Bank too is holding on to the gains of 100 points. But yes, the expiry is through today and we are indeed expecting a bit of an action, especially in the last half an hour. But for now, the range-bound trading session continues on the markets. But with this, let me also welcome our experts on the show today. We do have Arpit Beriwal with us and Kapil Shah, technical analyst at MK Global Financial Services, is also with us. A very good morning, gentlemen, and thank you so much for your time. And Arpit, firstly, help us understand what do you make of the market and where do you see the expiry happening today?
Yeah, the broader market and the benchmark index. So Nifty on the technically on the weekly scale has negative the formation of lower highs after almost 6 to 7 weeks. And from last couple of days, we see a flat or gap up opening. But the good part is that buying interest is visible at the lower levels. Looking at the option data for the expiry perspective, 25,100 is the maximum call rating and put writing. And looking at the overall stance, our stance is that Nifty is likely to close near above 25,100 level, 20 or 20 points up or minus. But 25,000 will act as a major support, and our stance is that till Nifty holds above, closes above 25,000, we can see a move towards 25,250, 25,300 in the coming week, as next will be the monthly expiry. Now talking about the Bank Nifty, so Bank Nifty has been over consolidating in a broader range of 500 points. So Bank Nifty has been also negative formation of lower highs after almost 5 to 6 weeks. But Bank Nifty got stuck in a range between 500 points in between 55,600 to 56,250 levels. And our sense is that till Bank Nifty also holds up a 55,555, our stance would be positive. But technically, Nifty is more outperforming compared to Bank Nifty. So our stance would be more bullish on Nifty going forward for the coming week as well.
All right, so stance will be more bullish on Nifty and Nifty Bank that is still holding on to some gains right now. But along with that, Kapil, what's your take on Reliance? Because that big boy is indeed lending some support to the benchmark indices, up over 1% right now. What are the charts telling you?
Yes, so first of all, good afternoon to everyone.
afternoon.
So Reliance has witnessed a kind of a very steep decline from the 1,500 to 1,3560 level around. And with this particular fall, the index has come close to its previous base. It is also retesting the 200-day moving average, where its slope has improved on the high side. And after some sorts of a time consolidation in the range of 1,400 to 1,360 level, the stock has started to pick up some sorts of momentum. So that is indicating some sorts of a positive buildup is happening. So we are maintaining the bullish stand in this. And in a very shorter term perspective, we can see that from a 1,230 level, the stock can inch up to the 1,465 to 1,470 level.
All right, so that's the take coming in on Reliance right now. Let's watch out for that. Yes, after that steep fall, the stock in a slow and stagnant manner is seeing some bit of an up move. But Sunny, what do you believe is helping in fueling the rally in the pharma counters? What we are getting to see is that the sector is emerging out of the bit of an underperformance we have seen off late, or any fresh triggers are perking up for the pharma space right now?
Yeah, so coming to pharma sector, I think time and again there has been headwind in terms of likely tariff imposition by US, and that has led to a kind of underperformance as far as pharma sector is concerned. But within pharma, if you look at a selective space like CDMO companies, they have reported a decent set of number of late, and we believe the future continue to remain very good for all these CDMO based players. So whether it is the companies like Blue Jet Healthcare, or for them matter Sai Life Science, Shilpa Medicare. So I think mid-sized pharma companies is a place to be in. Even from a frontline counter, we have seen a decent set of number by companies like Lupin and Cipla. Again, there if somebody is looking for kind of a 12 to 13% kind of CAGR return, those that companies will remain in focus. I think the pharma again, it's a long-term structural story, and I don't think so there should be any significant impact or a possibility of tariff by US, because again it's a very basic necessity in US, and time and again it's not possible that you can ship the entire manufacturing facility from India to US in a span of 6 or 8 months. It's a kind of very long drawn process, and anyway India in the entire value chain is at a very lower end of the price band. So most of the products which are sold in US are basically generic product, and again there the possibility of cost reduction is very negligible. So I think again, I think any uncertainty because of this trade tariff is a good opportunity to accumulate a pharma counter from a medium to long term perspective.
So that's the take coming in on the pharma sector. Look out for opportunities and start accumulating. But Sunny, with this we let you go on that. Thank you so much for taking the time out and speaking with us. The time now to slip into a very short break. Don't go anywhere. We'll be right back with more on the other side.
Okay, let's get back to tracking markets, and we've got Sudeep Bandyopadhyay as well joining in on the show right now. Sudeep, hi, afternoon. Good to have you as always. I guess one is seeing broadening of the GST rationalization, sentimental move play out in the markets, and newer names are now joining the bandwagon. Sudeep, anything that you would recommend from the entire consumption theme?
Well, I think consumption, of course, is exciting, and I would indirectly recommend indirect consumption, which is cement. I think this industry has been doing pretty well. If you see the quarterly numbers, the numbers have been pretty good, impressive. The industry has done fabulous cost control. Demand is picking up. Government is spending huge amount on capital expenditure, and that's leading to significant increase in demand, which will result in pricing power coming back, post-monsoon, we will see a lot of excitement. On top of this excise rationalization will benefit the cement industry, which was attracting 28% GST in a big way. I think per bag cost will come down by 25 to 30 rupees once the rationalization happens. That should spur further demand and help the industry. So cement is one segment where we have been bullish, and we increase our excitement on cement even after this GST rationalization proposal. Beyond this, I think the other segment which I think everybody is talking about is consumer durables. We have been positive recently in consumer durable on the back of the fact that monsoons, the festive season is setting in very soon. Monsoon has been good. Interest rates are coming down. Government has given relief to the common man on income tax. So all this was auguring anywhere well for the consumer durable pact. Now this GST reduction, on top of everything else, is a bonanza, and I'm sure consumption demand for consumer durables will pick up significantly in the festive season. So one can look at the air conditioner manufacturers like a Voltas, or even a OEM like a Amber Enterprises. I think these are good stocks to buy from a long-term perspective even now.
All right, so those are some of the sectors and pockets that are looking interesting to Sudeep right now. But with this, let's also get you some of the trading ideas from both of our experts. And Arpit, you go first. Tell us which is the stock that you are tracking right now.
So looking at the overall market specific, so pharma space is relatively resilient, and within that we talk about, so you have two ideas. One would be the pharma, second would be from the NBFC space. So pharma, look at the chart structure wise, good risk reward entry is seen, lowest lab. So look at the technical structure, monthly scale strong uptrend, weekly scale a range breakout above 870 levels, daily scale hovering above with 20 demand. So strong uptrend, and the stock is likely to scale back to its previous life highs. So one can go long with keeping stop loss of 855 for an upside move towards 920. Second move from the NBFC pack. So Bajaj Finance, if you look at the chart structure, Bajaj Finance good recovery or seen from the lower levels on the weekly scale, negative the formation of lower highs after 4 weeks. On the daily scale, the stock is consolidating, but the entry point is very favorable as it's near its support zone. So I think from here on, risk reward is quite favorable. One can go long, keeping stop loss of 870 for an upside move towards 950 zones.
Two stocks from on Arpit's radar, one from the pharma healthcare diagnostic laboratory space. In Bajaj Finance, we also had a Jefferies note where they have initiated their research on Bajaj Finance with the target price of 2420, and now Arpit also is positive. 950 is the target on Bajaj Finance, and 870 is the stop loss. 0.5% to 1% gain we see. Kapil, what will be your trading ideas for the day, the closing trades?
Yes, sir. So here I first want to go with an EV Capital. So EV Capital has been under a very strong uptrend, and after the time-wise correction and having the ratios around the 282, so in the past couple of 2 to 3 trading sessions that has been sustained. So we are seeing the bullish continuation sign on this. So right now the stock is trading in the 289 level. So with the stop loss of 280, we are bullish on this, and with an upside potential of around 310, 320. So there is a first stock, and another stock is in a Dr. Reddy. As the pharma stocks are finding the traction after the 4 and 5 trading sessions blips, again it is finding the traction, and within the Dr. Reddy it has fallen down, came to the base, show some sorts of violations, but now again sustaining the move on the higher side. So at this particular point, Dr. Reddy seems to be in buy opportunity with a stop loss of a 1230 level, and on the high side 1360 will be the target.
So good moves on the pharma space, like we have been flagging off, and our experts are also liking select counters on the charts. But moving on, and India's market regulator is looking for ways to increase the tenure and maturity of equity derivatives contract. Those are the words coming in from Tuhin Kanta Pandey, SEBI chief. Let's firstly go across and listen in what he has to say.
Improving the tenure is really means that to know whether we can sort of have longer term, more longer term derivatives. But all this is to be done in consultation. As I said, that in what form, how, we'll have the consultations.
So and we will have a consultation paper
Yes. Nothing will be on. Qualitatively we have to see, but we have to calibrate it. So if you really look at my statement where I said in a calibrated manner. So these are not something which are there. This is only in principle with what I'm stating we should be doing.
Okay, let's now take it across to Sharad Dubey, my colleague, for the key reasons which have spooked the capital markets so far. Sharad, take it away.
Capital market team stocks have taken a beating in the day's trade as SEBI chairperson Tuhin Kant Pandey, in a FIC event, he had stated that there's a need to increase the tenure of the equity derivatives contracts. Now, it's expected that there would be a consultation paper which would come in shortly, and that is why it's spooking the markets. Interestingly, he stated that this would be a calibrated approach and the focus would be there to develop the cash markets. Now, the initial crack happening, this is of course the market is spooked, is that there might be doing away from weekly expiries to monthly expiries. Also, there might be more deterrent in the retail participation, which is already down because of the SEBI F&O regulations over the last 4 to 6 odd months, and a knee-jerk reaction is there. Now, the long-term contracts itself may not give enough liquidity, and the retail volumes might be impacted more. Now, we also spoke with a lot of industry spokespersons also, and they have stated that SEBI must take investor opinion before taking any such step. And the clarity also should be there on the definition on the long-term contracts. Now, of course, this is just a consultation paper. If it comes, there'll be a lot of talking with the industry. There will be representations made from various associations. So that is also an important thing to track for this segment. And the most important is the liquidity and the growth. Will that impact the Indian markets or not? So that's a very important statement coming from the entire community.
Absolutely, a statement from Tuhin Kant Pandey, and that has given friction to the exchange ancillaries. Sudeep, I'll take it from you. What is your take on this entire thing? Because exchange ancillaries, as we see, we have seen good amount of upticks in our previous sessions, but now because of the statements coming in like this, and also we do see some sideways actions, particularly in the capital markets, exchange ancillary platform stocks. Is the undertone for the long term bullish?
Well, if you are talking about 3-5 kind of year time horizon, definitely, because we believe market infrastructure institutions will continue to do well. Financialization of savings is real. But leave aside the 3-5 year kind of time horizon. If you look at a slightly shorter time horizon of even 3 to 6 months, 1 year, I think there is volatility and there are challenges. Look, the regulator and the government, I think, is very focused on, kind of protecting the common man, protecting the small investor. There is a thread running through the thinking of the government. If you look at banning of online games, coming down on F&O in a big way, because the data shows that 90% plus people lose money when they are trading in F&O. So I think they're trying to curb this speculation. And to ensure that speculation comes down, they're taking multiple steps, which amongst others includes what the SEBI chairman is talking about. If you enlarge the contract time horizon, so obviously the number of contracts will come down. So the volume of trading will come down. Naturally, BSE will get impacted. And naturally, broking houses which have significant derivative trading volumes will get impacted. And that's why they're reacting. And please remember that none of these stocks are quoting cheap. They are fully priced. So, any kind of news which indicates that their income will suffer definitely will have a detrimental impact, and that's pretty much what is happening. So whether it's a BSE, whether it's an Angel One, there is a rationale for them correcting, and that's what is happening. And I don't see this as, we can't dismiss this move by SEBI, because this is what generally is the thinking of the regulator and the government.
Absolutely. Just looking at, some of the other buzzers in trade right now. And from the capital good themes as well, you are seeing a fair amount of movers there. Look at a PG Electroplast, for instance. We were just chatting with the Blue Star management as well after the GST rate rationalization and what kind of fillip they actually anticipate with the onset of the upcoming festive season as well. So PGEL, for instance, has shot up over 4%. Sudeep was chatting about the entire cement theme, but some of the other peripheries perhaps could be pipe companies as well. We were chatting with Astral as well as Supreme Industries just the other day, and they're also extremely hopeful and buoyant about the kind of volume offtake that they may actually see post the rate rationalization. In fact, let's hear out what the Astral management, Hiranand Savlani, the ED and CFO, told us. Not just the rate rationalization, but also the anti-dumping duty on PVC, which also stands to benefit the entire industry.
Industry is going to get a very big benefit, and industry was in fact eagerly waiting for this announcement. So now industry is very happy with this announcement. At least 10 to 15% price will go up. So with that, the realization of every company will go up, and ultimately it is going to help us in the improvement into the realization percentage. At the same time, margin will also improve. Some inventory gains will come from the Q3 onward. So I think a lot of benefits are there. And the biggest benefit which we are seeing that the sentiment is going to change in a big way. Because since long, dealers and distributors were not happy to have the inventory. So nobody was stocking that inventory because everybody was under the fear that the prices are going up. Now with this announcement, at least one thing is clear, that at least from here on, the prices will not drop. From here on, prices will be one-way journey for 10 to 15% increase. May not happen in 1 month or 2 months. It may take some time. But at least signal is very clear that from here on, the prices are going to go up. So that is going to restock the inventory by every dealers and distributor community.
All right, so very interesting comments coming in from Astral. For the past 3 days, the stock is only going up, and so is Supreme Industries, indeed.
Oh, yeah, absolutely. We'll take a very quick break on that note. When we come back, we'll continue tracking markets and, of course, the last lap of today's trading session. Marginally higher, that's where the Nifty is currently in trade, but we're still clinging on to that 25,000 mark, so that's definitely a heartening sign. Amongst the large caps, it's all about pharma, Cipla, Dr. Reddy's, they're the ones which are right on top. And then, of course, there are the BFSI names, the likes of a Bajaj Finance, Finserv, ICICI Bank, which are also adding to the weightage on the movers today. But on the flip side, the weakness is in the capital market theme for sure, like we addressed. BSE, Angel One, that's where you're seeing big cracks emerge. There's also MCX. Dabur is seeing some profit taking after a run-up the past 2 trading sessions. So these are pockets which are ebbing off. But a Mankind, LTF, Titagarh, PJ Electroplast, all of these names, they continue to hold on to gains. But here's the Big ET Now exclusive. We caught up with the DIPAM secretary as he discusses the timeline of government's divestment in IDBI Bank. He says that the process, or rather the core process, will be complete by the end of the current fiscal.
So what is the latest update on IDBI Bank, and can we see the final closure of the divestment process of IDBI Bank in this calendar year?
We have, as I said, we have completed the EOI process. The qualified parties have been through the provisional fit and proper assessment of the RBI as well. We are in an advanced stage of completing the due diligence exercise, and which includes the data room, the details, the legal documents, and hopefully we hope to complete this diligence and data room process by September. So hopefully by the end of the year you will hear good progress.
So end of the year means calendar year or the financial year we will close this divestment?
Wait for it. Time will come. Good announcements will come.
All right, so that's the exclusive chat with Deepan Sekhi. The time will come and the whole announcement will be through. But for now, the due diligence is finally through. But Kapil, what do you make of IDBI Bank on the charts? All right, I guess we have Arpit with us. Arpit, what do you make of IDBI Bank on the charts? Because it's a 7 to 8% move just on an intraday basis. How do you see the structure, and are the volumes also quite impressive at this point in time?
So looking at the overall chart structure, if we see the chart structure of IDBI on the weekly setup, so it has taken support near its major supports around 88, 89 levels, and on the daily scale holding well above 200 DEMA. So as rightly mentioned, we've seen a sharp spot on the daily scale on the intraday basis almost by 8 to 10%, 8.5%. So I think on the upside, 102, 106 would be the major hurdle zone. And looking at the volume setup, definitely closing above 95 levels can trigger the stock towards 102 and 104 levels. So why the overall bias will be positive for an upside move towards 102 and then 104 levels. That is a major hurdle zone for this account.
Okay, that's the take coming in on IDBI Bank now. Just looking at the entire screen, Cipla, DRL, these are all names which are holding out quite smartly in trade. Other than that, Reliance, BEL, that's also where you're seeing meaningful moves come in. And Sudeep, it all seems to be building up for the Reliance Jio IPO. Citi Note pretty much predicts that as well. But what is your sense? Where do you think the valuation is going to add up? Because the math, according to Citi, seems to be indicating the SOTP valuation for the parent Reliance Industries at a sizable $120 billion.
Absolutely. I think, SOTP valuation of Reliance is definitely significantly higher than the current market capitalization. You have to look at the telecom business, which in itself is the biggest telecom business in the country. And, they will get a valuation which should be more than Bharti at this stage, based on the numbers, based on how things are shaping up. Then you have the retail business, which is the largest retail business in the country. They have carved out the FMCG business from the retail now, and the FMCG book turnover and the volume itself today is almost equivalent to Dabur, and it's growing on a daily basis. So you can imagine that. Then there's a new energy. So I think the moment you start doing SOTP valuation, Reliance looks very, very attractive, and we have been recommending a buy in Reliance from a long-term point of view, and that remains. The traditional businesses had their share of challenges, but the refinery being unique and they're capable of refining multiple grades of crude, that gives them a unique position, and their GRMs are always better than industry as well as the Singapore GRMs. So that's another advantage. Petchem issue depends on global prices and whole lot of fluctuations on the commodity prices, and that's one segment where pressure has been continuing for quite some time. Other than that, I think all the businesses are firing on all cylinders.
But everything but the stock price, Sudeep. What do you do about that? It's been stuck in a range for so long.
I agree. I think the value unlocking, Aisha, will happen once these IPOs start coming. I think Jio is going to be the first of the block. Retail probably will be the next. Somewhere FMCG, new energy, all these value unlocking will start. And I think at some point of time, we will start seeing value getting created, which will reflect in the share price as well. But whichever way you look at it, I think the share definitely looks attractive from a long-term perspective. If you ask me what's going to happen tomorrow or day after, it's very difficult to predict. But if you take a 1 year kind of a time horizon, it's definitely worthwhile.
Arpit, what's your reading? Because ever since SEBI came out with those proposals with regards to minimum offer size requirement for large IPOs, one has seen a lot of excitement around Reliance. But can it really sustain the gains?
From last almost 6 to 7 weeks, the stock was falling from higher levels, and last week seen a recovery on the weekly time frame above 1400 levels, and that is also one of the major reasons why we've seen good recovery in the Nifty. So technically, definitely it is a major support zone, bouncing from its 200 DEMA, almost on the verge of a consolidation breakout on the daily chart above 1400 levels. So I think slowly, steadily, the base of the stock is shifted higher, and the stock can move towards 1450, 1480 levels, but the pace of gradual buying would be very slow, as it has been broadly trading in a range. So overall bias will be positive till it closes above 1400 levels for an upside move towards 1450 and then 1480 levels position.
So like Aisha said, anything but the stock price, and we wish to see that moving. But let's take a look at the levels also. Just 3.5 minutes for the market close, and 25,000 is the mark which we are trying to keep at it. But 25,100, that we have lost it from the day highs. The markets are frizzling the gains. 25,076, around a 76 points downtrend from the high. But at the same time, let's take a look at how the market closing looks like. And Ashesha is standing by and giving us a snapshot of the market closing.
Well, yes, Mansi, markets did give up some of those gains in the last 1 hour of trade. But despite that, Nifty is ending with an uptick of a marginal 25 points, ending above the 2550 mark. Nifty banking index should also come up for you on your screens. This one also was underperforming in trade, but Nifty banking index, that one is also ending with an uptick of nearly 30 or 40 odd points, near that 55,740 mark. Broader markets indices should also come up. Nifty small and mid cap index, remember, as I mentioned, we gave up all of those gains. Nifty small cap index ending absolutely flat for the day. Mid cap index though is ending with a downtick of nearly 0.4%. In terms of top gainers from the Nifty 50 pack, we had Cipla. This one is ending up 3%, the biggest gainer on the Nifty 50 index, followed by Dr. Reddy's and SBI Life. So these were some of the top gainers. On the losing side though, Bajaj Auto, this one is ending nearly 1.5% lower. Coal India and Power Grid were also tepid in trade today. Bajaj Auto down 1.5% at 8695. We should also have Power Grid ending at 284, 1.5% lower on this counter as well. In terms of individual sectors, pharma stocks were bucking the trend. So we had Mankind Pharma, this one was up 4%. Cipla was up 3%, as I just mentioned. Dr. Reddy's also ending the day with an uptick of nearly 2.5% in trade today. On the losing side though, FMCG stocks were under pressure. Nifty FMCG index was the biggest sectoral loser in trade today. It should come up for you on your screens. Nestle down 1%. We had Dabur, which was down 3.5%. Britannia down nearly 2% in trade. And we also had United Breweries. That one is also ending with a downtick of nearly 1.5 to 2% in trade. In terms of individual stocks, remember we had this all-important commentary that came in from Tuhin Kanta Pandey, SEBI chairperson, with respect to derivative contracts, that the duration and the maturity can be longer going forward. So we saw that crackdown come in for BSE. The stock is ending 7.5% lower on the back of this news piece. But it was not just BSE. Apart from that, several of these capital market plays were under pressure. Angel One ending 6.5% lower in trade. We have Motilal Oswal, which is down 1.5%. JM Financial Services and the likes. CDSL also ending the day with a downtick of nearly 1%. Meanwhile, Hexaware Technologies, we had a brokerage report on this counter where Nuvama has initiated coverage with a buy. 950 is the target price. Hexaware ending 4.5% higher on the back of this news piece. Jupiter Wagons on the back of an order win, although the value of the order was not as much. They received letter of intent for Vande Bharat trains, the order value at about 225 odd crores. Jupiter Wagons at one point, in fact, was gaining nearly 7%. It gave up all of those gains, ending the day with an uptick of nearly 3.5%. CAMS, meanwhile, where the board has received no objection letter from RBI for transferring online payment aggregator activities to CAMS Payment Services, which is a wholly owned subsidiary, the stock ending 1.5% higher. Railtail Corp, again on the back of some order wins, they won orders worth about 50 odd crores. And Swiggy, meanwhile, CLSA has maintained accumulate rating and they've revised their target upwards to 509. Swiggy is also ending 2% higher. So all in all, on the index level, Nifty is ending near that 25,075 odd mark. But a whole host of individual buzzers in trade were buzzing on the back of news piece. But that's all the time we have on this edition of the show. Thanks so much for tuning in.